The Daily Trading Coach, 101 Lessons for Becoming Your Own Trading Psychologist, Brett N. Steenbarger. Most traders don't fail because of strategy. They fail because they can't control themselves. You already know what to do. Cut losses, stay disciplined, follow your plan. But when the moment comes, you don't do it. This book shows you one powerful truth. You must become your own trading coach. So if the real problem is not your strategy, but your habits and behavior, then the first step is learning how to change yourself, starting from the inside. Chapter 1. Change, the process, and the practice. Change in trading does not happen by simply reading books or learning new ideas. Real change comes from practice. Many traders already know what they should do, such as cutting losses or following a plan. The problem is not knowledge, it is action. This chapter explains that improvement starts with awareness. You need to observe your own thoughts, feelings, and behaviors while trading. The author suggests keeping a detailed journal. But this is not just about recording trades. You should also write down your emotions, decisions, and mistakes. Over time, you will begin to see patterns. For example, you may notice that you break your rules when you feel anxious or excited. Once you see these patterns, you can start to change them. Another key idea is that change is a process, not a single event. You cannot expect to become disciplined overnight. Instead, you need small, daily improvements. Each lesson in this book is designed to help you take one step at a time. The chapter also emphasizes active learning. Instead of only thinking about change, you must do something different. For example, if you often hold losing trades, you can practice exiting earlier in small positions. Practice builds new habits. In short, this chapter teaches that lasting change requires awareness, repetition, and action. You are not just learning about trading, you are training yourself. Chapter 2. Stress and Distress, Creative Coping for Traders. Trading is stressful by nature. Prices move fast, and money is always at risk. This chapter explains that stress is normal and cannot be avoided. However, how you respond to stress makes a big difference. There are two types of stress: helpful stress and harmful stress. Helpful stress keeps you alert and focused. Harmful stress causes fear, panic, and poor decisions. Many traders react to stress in unhealthy ways. They may overtrade, avoid taking trades, or chase losses. These reactions come from emotional discomfort. The key is to learn how to handle stress in a healthy way. The author introduces simple techniques to manage stress. One method is to slow down your breathing. Deep and steady breathing can calm your body and mind. Another method is to take short breaks. Stepping away from the screen helps you reset your emotions. Reducing position size is also useful because smaller risk lowers pressure. The chapter also highlights the importance of preparation. When you have a clear trading plan, you feel more confident. Confidence reduces stress. In contrast, trading without a plan increases uncertainty and anxiety. Finally, the author explains that stress can be used as a signal. When you feel strong emotions, it may mean something is wrong with your trade or your mindset. Instead of ignoring stress, you should learn from it. In summary, this chapter teaches that stress is not the enemy. If managed well, it can help you become a stronger and more disciplined trader. Chapter 3. Psychological Well-Being, Enhancing Trading Experience. Trading is not only about making money, it is also about your mental and emotional health. This chapter explains that your well-being has a direct impact on your trading results. When you feel tired, stressed, or unhappy, your decisions become weaker. You may take impulsive trades, ignore your plan, or lose focus. The author highlights the importance of building a strong and healthy mindset. This includes good sleep, regular exercise, and balanced daily routines. These simple habits improve your energy and concentration. When your mind is clear, you can think more logically and act more consistently. Another key idea is finding positive experiences in trading. Many traders focus only on profits and losses, but this can lead to frustration and burnout. Instead, you should also value good execution. For example, following your plan or managing risk well is a success, even if the trade loses money. The chapter also encourages traders to build confidence step by step. Confidence does not come from winning big trades. It comes from doing the right thing repeatedly. Each time you follow your rules, you strengthen your discipline. Finally, the author explains that a healthy trader is a better trader. If you take care of your mind and body, you will trade with more clarity, patience, and control. In short, this chapter teaches that improving your well-being is not separate from trading. It is a key part of success. Chapter 4, Steps Towards Self-Improvement. The coaching process. Improving as a trader requires a clear process. This chapter explains how to coach yourself step by step. The author shows that successful traders do not improve by chance. They follow a structured method to learn from their experience. The first step is setting clear and realistic goals. Instead of saying, "I want to make more money," you should focus on behaviors. For example, "I will follow my stop loss on every trade." Clear goals make improvement measurable. The next step is reviewing your performance. After each trading session, you should reflect on what you did well and what needs improvement. This is where your trading journal becomes very important. By reviewing your actions, you turn experience into learning. Another key part of the coaching process is feedback. You must be honest with yourself. Avoid blaming the market or making excuses. Instead, focus on what you can control, your decisions and behavior. The chapter also emphasizes making small, consistent changes. Big changes are difficult to maintain, but small improvements, repeated every day, can lead to strong, long-term results. Finally, the author explains that self-coaching is a skill. The more you practice it, the better you become. Over time, you will be able to guide your own growth without depending on others. In summary, this chapter teaches that trading improvement is a process. With clear goals, regular review, and honest feedback, you can continuously become a better trader. Chapter 5, Breaking Old Patterns, Psychodynamic Frameworks for Self-Coaching. Many trading mistakes are not random. They come from deep patterns inside your mind. This chapter explains that your past experiences, beliefs, and emotions shape how you trade today. For example, if you fear failure, you may exit trades too early. If you seek approval, you may follow others instead of your own plan. These patterns often work automatically. You may not even notice them. That is why the first step is to become aware of your emotional reactions. Pay attention to moments when your behavior changes. Ask yourself, what am I feeling right now? And why am I reacting this way? The author suggests that your trading behavior often reflects your personal life patterns. If you are impatient in daily life, you may also be impatient in trading. If you avoid problems, you may avoid taking necessary risks. Understanding these connections helps you see the root cause of your mistakes. To break old patterns, you must interrupt them. When you notice a strong emotional reaction, pause before acting. Give yourself time to think. This small pause can stop automatic behavior and allow better decisions. Another important idea is to replace old patterns with new ones. For example, if you tend to overtrade when you feel bored, create a rule to step away from the screen instead. Over time, new behaviors will become stronger. In summary, this chapter teaches that trading problems often come from deep habits. By becoming aware of them and changing your reactions, you can break old patterns and trade more effectively. Chapter 6. Remapping the mind. Cognitive approaches to self-coaching. Your thoughts play a powerful role in your trading. This chapter explains that many trading problems come from unhelpful thinking patterns. For example, you may think, "I must win this trade," or "I cannot lose again." These thoughts create pressure and lead to poor decisions. The author introduces cognitive techniques to improve your thinking. The first step is to identify your thoughts during trading. Notice what you say to yourself, especially in stressful moments. Are your thoughts realistic, or are they driven by fear or hope? Once you identify unhelpful thoughts, the next step is to challenge them. Ask questions like, "Is this thought true?" or "Is there another way to see this situation?" For example, instead of thinking, "I must win," you can think, "My job is to follow my plan." This shift reduces emotional pressure and improves discipline. The chapter also emphasizes focusing on process rather than outcome. You cannot control the market, but you can control your actions. When you focus on doing the right thing, results will improve over time. Another useful technique is positive self-talk. Encouraging and realistic thoughts can help you stay calm and confident. This does not mean ignoring risks. It means thinking clearly and constructively. In summary, this chapter teaches that better thinking leads to better trading. By changing how you think, you can improve your decisions, reduce emotional mistakes, and become a more consistent trader. Chapter 7. Learning new action patterns, behavioral approaches. Knowing what to do in trading is not enough. Many traders understand the rules, but still fail to follow them. This chapter explains that real improvement comes from changing your actions, not just your thoughts. You must train new behaviors until they become natural habits. The author focuses on practice and repetition. Just like learning a sport, trading skills improve through training. You can create small exercises to build discipline. For example, you can practice exiting trades quickly when they hit your stop loss. You can also practice waiting patiently before entering a trade. These simple actions, repeated many times, help build strong habits. Another key idea is to use reinforcement. When you follow your rules, reward yourself. This can be something small, like taking a short break or giving yourself positive feedback. Rewards help your brain connect good behavior with positive feelings. The chapter also suggests breaking big goals into small steps. Instead of trying to fix everything at once, focus on one behavior at a time. For example, you can spend 1 week working only on position sizing. Small improvements are easier to maintain and lead to long-term success. Finally, the author highlights the importance of consistency. Good habits are built over time. If you repeat the right actions every day, they will become automatic. In summary, this chapter teaches that discipline is a skill. With practice, repetition, and small steps, you can build strong trading behaviors. Chapter 8. Coaching your trading business. Trading should be treated like a business, not a game. This chapter explains that successful traders manage their trading with structure and discipline, just like running a company. Without a clear system, trading becomes emotional and inconsistent. The first step is to define your trading plan. This includes your strategy, risk rules, and goals. You need to know when to enter, when to exit, and how much risk to take. A clear plan reduces uncertainty and helps you stay focused. Next, the author emphasizes tracking performance. You should measure your results regularly. This includes not only profits and losses, but also how well you follow your rules. By tracking your performance, you can identify strengths and weaknesses. Another important idea is risk management. In a business, protecting capital is essential. The same is true in trading. You must control your losses and avoid taking unnecessary risks. Small losses are part of the process, but large losses can damage your account and your confidence. The chapter also encourages continuous improvement. A good business always looks for ways to improve. As a trader, you should review your results, adjust your strategies, and refine your process. In summary, this chapter teaches that trading success comes from structure, discipline, and management. When you treat trading like a business, you increase your chances of long-term success. Chapter 9. Lessons from Trading Professionals. This chapter shares key lessons from successful professional traders. These traders are not perfect, but they are consistent. One important lesson is that professionals focus on process, not just profits. They care more about following their rules than making quick money. Over time, this leads to stable results. Another key idea is risk control. Professional traders understand that losses are part of the game. They do not try to avoid losses completely. Instead, they manage them carefully. They keep losses small and protect their capital. This allows them to stay in the game longer. Discipline is another major factor. Professionals do not trade based on emotions. They follow their plans even when it feels uncomfortable. They know that emotional decisions often lead to mistakes. By staying disciplined, they reduce unnecessary risks. The chapter also highlights the importance of preparation. Before trading, professionals review the market, plan their trades, and set clear goals. This preparation gives them confidence and helps them act quickly when opportunities appear. Another lesson is continuous learning. Successful traders always review their performance and look for ways to improve. They treat every trade as feedback. In summary, this chapter shows that professional traders succeed because of discipline, risk control, and consistent habits. These are skills that any trader can develop with practice. Chapter 10. Looking for the edge. Finding historical patterns in markets. To succeed in trading, you need an edge. An edge means having a small advantage that gives you better chances of success over time. This chapter explains that an edge often comes from studying historical market patterns. Markets tend to repeat certain behaviors. Prices may move in similar ways under similar conditions. By studying past data, you can find patterns that help guide your decisions. For example, you may notice that certain setups work better in specific market conditions. However, the author warns that not all patterns are reliable. Some patterns appear by chance and do not repeat. That is why testing is very important. You need to check if a pattern works consistently over time. This can be done through backtesting or reviewing past trades. Another key idea is combining your edge with discipline. Even a strong edge will fail if you do not follow your plan. Consistency is what allows your edge to work over many trades. The chapter also emphasizes flexibility. Markets change, and your edge may stop working. You need to adapt and continue learning. A successful trader is always searching for new opportunities. In summary, this chapter teaches that an edge is essential for trading success. By studying patterns, testing ideas, and staying disciplined, you can build and maintain your advantage in the market. Now that we've explored all the key ideas and lessons from this book, let's step back and see what really matters and how these ideas apply in real trading. This book changed how I understand trading. Before reading it, I thought success came mainly from strategies, indicators, or market predictions. But this book makes one idea very clear. Trading success comes from your mind. Your thoughts, habits, and emotions decide your results more than your strategy. One of the most powerful ideas is becoming your own coach. Many traders depend on signals, courses, or experts. But in real trading, no one can guide you in the exact moment of decision. You are alone with your thoughts. This means you must learn how to manage yourself. You need to observe your behavior, correct your mistakes, and improve step by step. Another important lesson is that small daily actions create big results. The book uses short lessons to build habits over time. This shows that improvement is not about big changes, but about consistency. If you follow your rules every day, even in small ways, you will become a better trader. To apply this in real trading, the first step is to keep a simple trading journal. Do not only record profits and losses, write down your thoughts, emotions, and decisions. For example, note when you feel fear, when you hesitate, or when you break your rules. This helps you see patterns in your behavior. The second step is to focus on process, not outcome. Instead of thinking, did I make money? Ask, did I follow my plan? A good trade is one where you follow your rules, even if it loses money. This mindset reduces emotional pressure and builds discipline. The third step is to practice self-control in small ways. For example, if you often overtrade, set a rule to take a short break after each trade. If you hold losing trades too long, practice cutting losses quickly with smaller positions. These small actions train your behavior. Finally, consistency is the key. You do not need to be perfect. You just need to improve a little every day. Over time, these small improvements will create strong habits and better results. In the end, this book is not just about trading. It is about training your mind. And once you master your mind, you can improve not only your trading, but also your life. To make these ideas simple and practical, let's break everything down into 5 core lessons you can remember and use every day. 1. You are your biggest edge and your biggest risk. Your results depend more on your behavior than your strategy. If you can control your emotions and actions, you gain an advantage that most traders do not have. 2. Awareness comes before improvement. You cannot fix what you do not see. By tracking your thoughts, feelings, and decisions, you can find patterns and start to change them. 3. Consistency beats intensity. Big changes do not last, but small daily improvements do. If you follow your rules a little better each day, you will see strong results over time. 4. Focus on process, not profits. You cannot control the market, but you can control your actions. Good decisions, repeated over time, will lead to better results. 5. Train your mind like a skill. Discipline is not a talent, it is something you practice. The more you train your behavior, the more natural good habits become. If you can apply even one of these ideas consistently, your trading and your thinking will start to change. Like this video if you want real insights and subscribe for more on brilliant thoughts.